All right, good afternoon. 4:03 p.m., June 14th. This is your post-market report. It was a beautiful day, right? Beautiful, beautiful day. We had the Dow finishing 0.3% lower. We had the S&P making a run. Everything made a run towards the close. This is what we call Woody in the business. A little Woodrow Wilson in the back seat driving the car, pumping up the gas a little bit from the, behind the wheel. He opened the Federal Reserve, blah, 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 and this is who comes in and buys this stuff. You see late day rallies all the time. You see late day sell-offs too, but generally in this kind of bull market, you see the late day rallies. And that's all well and beautiful. I mean, I'm bullish, right? And the NASDAQ put on a gain of 0.74%. That's a pretty good rise and a new record close for the NASDAQ, okay? Pretty big stuff right here, honestly. S&P 500 put on 0.2%. Okay, gold and silver were down substantially prior to the market open. Right as the market opened, they took a nice bump higher, $17 I think for gold off of the low or something like that. It was down at 1850, ended at like 1867. Same deal with silver, really. Silver, I believe, ended above $28 on the futures again. So, pretty good reverse rally in gold and silver. But what is really going on? Crude oil did pair some of its gains, though. It ended up slightly higher on the day. And, of course, cryptocurrencies making rallies across the board. So, a pretty soft but substantial day and a continuation of some important things in terms of what stocks are going to be anticipating this week and kind of how they're digesting everything. So let's talk, right? What drove the market today? I mean, crude oil being higher was definitely a positive for the market. The 10-year yield put on a substantial gain, and I think that was a little bit of a relief for the market. Cash coming out of the debt market, going into other assets. Going into the dollar. The dollar did finish slightly negative, 90.5 just about. But look, even though we had a record of the NASDAQ, even though all this other stuff happened, apart from the crypto sector, which really did put on nice gains today, we are just waiting for the Fed on Wednesday. And we're going to be waiting tomorrow, although we have a lot more data coming out tomorrow that's going to probably drive the market. We're waiting for the Fed to say, what are they going to do about inflation? Now, we know their end game, okay? They aren't going to raise rates. They aren't going to significantly taper their balance sheet. The only thing that they can do that would put pressure on this market, pressure on gold and silver, and push the dollar higher would be to say that in the future, they expect it. Because right now they're positioned to not raise rates until 2023, 24, 25. Different Fed presidents, they have this dot plot, whatever they say where they think stuff will go. They're not going to do any of that, but would they push this market down? Personally, I don't think they have the guts to really say that, we have to think about like very soon or like they'll probably come out and say at some point in the future, right? But right now, there's nothing to really say that we should be tapering or reducing our purchases of treasuries. Why? Well, because they don't have to. And the economy is still in free fall. The worse the economy gets, the higher the stock market goes, the more the Federal Reserve can inflate and thereby gain more power. Okay? And so you still have so many different data points you can point out. I wouldn't be surprised if they go to the labor market because unemployment is one of their mandates, or stable employment. I wouldn't be surprised if they go to the labor market, say employment levels, labor force participation rate, all these different things are not performing. Now, they won't mention money velocity. Keep that in mind because that's probably the number one indicator of the health of the economy, and that keeps falling. But they can't really talk about that because then that would let you in on the secret that their inflation only will really show itself in consumer prices in a more significant way than it is right now because it's already so high. But it'll only show itself once that transition is made, the velocity starts to actually rise. But yeah, I mean, some Federal Reserve presidents have come out and said, like Harker, I think, and Kaplan, they've come out and say, oh, blah blah blah. They're a little hawkish, as we say, wanting a rate hike, wanting a taper. Not actually wanting it, of course. They're just playing a game. But Powell has generally been a consistent player on this front, and we've also seen Yellen come out and support the Federal Reserve in terms of pushing them to inflate more through government programs subsidized by the Fed and with the Treasury for climate change, for infrastructure, for all these other things. So you're going to see basically the Federal Reserve say that we want to support new programs, we want to support the economy and support employment because we don't think that they are as good as they can be. We think that taking off the gas now when we're like so close to the promised land would be a bad thing. They're going to make excuses as to why they need to keep the inflation. And what do I think stocks, gold, and silver are going to do in response to that? Honestly, I just don't see much more downside for gold and silver. I mean, I told you I bought this dip this morning, and it went right up. And 1850 seems like another semi-important level on gold. We seem to have held that, and we're still holding 28 on silver. And the market continues to rise. So the market wants the Fed to continue what it's doing. It is okay right here, and it will continue to rise. Only something drastic from the mouth of the Federal Reserve would cause this to really go off balance. And why would they want to put it off balance right now? Everything is going according to their plan. A crash right now, it's too early. A big sell-off right now, a rate hike right now, it's too early. People would start to get in on what's actually going on, and they would start to fight back. Okay, so we've covered what what I think the Fed is going to kind of come out and say, and we'll see, because I think there's some Fed presidents talking tomorrow, if I'm mistaken, I don't know, but we'll see tomorrow how the market responds, and Wednesday before that 2 p.m. announcement, and I believe they have a press conference after that as well. And the press conference is really where things get a little, dicey, because the 2 p.m. announcement should just be pretty, rates are going to stay low, asset purchases are going to stay. But what is Powell going to say, But anyways, let's get on to something else. So this is from the Tell, and this is Jamie Dimon, the CEO of JP Morgan, largest bank in the world by assets. JP Morgan is sitting on about $500 million in cash, waiting to invest at higher rates. Now, just think about it for a second. Why is a bank sitting on $500 million in cash? Where did they get this money? And why are so many people still out here suffering? While banks are doing better than ever, awash in cash, they don't even know what to do with all the cash they have. I am a capitalist in general. I'm not really a capitalist. I just believe in more of a free market, right? This is not a free market, okay? When banks are being funneled money by the Federal Reserve, when the tech sector is getting a $250, $280 billion bailout on our backs, when they're awash in cash as well, when all the airline companies a while ago, I don't know if you remember this, why don't they have to maybe, sell some of their stock that they bought back instead of demanding that the government subsidize them and the workers, right? Or they'll fire the workers, right? Threatening this. So all these corporations around the United States, around the world, are awash in cash. Well, homelessness is booming, depression, anxiety. People can't, people on $400,000 a week for unemployment claims. All these different things going on in the world, and banks are awash in cash. Let me let you in on a secret. Wall Street banks, they don't really create shit. Okay, they really don't. And honestly, we would be better off if they didn't exist, okay? All of their functions, it's really designed to steal money. I know that they facilitate transactions, but you don't need this kind of facilitating of transactions, right? It's like they're just working for themselves. And this is what they say in the article. They don't hide it. We're waiting to invest at higher rates because, we want to benefit the bank. We want to make the bank more profits. Well, what about the people? Why do we have to bail out the tech sector? Why don't the banks bail out the tech sector? I don't know. This is just me off the top of my head. But why are we on the hook for everything? We were on the hook in 2008, right? For the TARP programs. We're on the hook for every single dollar of debt that is created by the Federal Reserve, okay? Understand that. Understand that they can do whatever they want, but we are the ones that get stuck with the bill. Therefore, that is why we need to become our own central banks. That's why we need to hold hard assets. We need to bet against the debt that they're putting on our backs. That is how we get out from under it, okay? At least that's my perspective, right? You have your own. Here's another one. Paul Tudor Jones sees green light to bet heavily on every inflation trade if Fed ignores price pressures Wednesday. I'm with this guy. I mean, I've been saying this for a long, long time. He likes gold, silver, Bitcoin, commodities as portfolio hedges. And I mean, we have inflation at 5%, okay? And they go on to say, Jones indicated that significant upside remains for commodity markets, agreed, with bullish positioning well below levels seen in 2013, agreed, when inflation was peaking around 3%. It's at 5% right now on the CPI. People are so negative on metals still, so negative on cryptocurrencies. I swear, I barely see positive articles about these things. But then you get the billionaire coming out who really understands the game, and they can't really shut him up because he's so big, and he's telling you what's kind of going on. And this is right. So getting back to the same level of investment that commodities had in 2013 would require another $400 billion of inflows, a move that could see the Bloomberg Commodity Index double. Okay, double. And we're talking about just to get back to the level we were in 2013. You see, when cash really starts to flow into the commodity markets, there's so much more cash that has been created already. So it's not just going to double, you know. I mean, I've put a $200 target on silver in the next 5 years, and I think was it 10,000 or 15,000 for gold in the next 5 years. And this is the kind of moves that we're going to witness. And I mean, just wait and see. Buy and hold these things. You know, this is where you want to be. I mean, I don't really have much more to say. I think this has been a good video. It's been a long video. I've kind of went off the deep end on some of this stuff, but I was a little fed up today. You know, I don't know why. I'm just a little fed up. But I hope you enjoyed this stuff. I know these are long, and if you made it to the end, God bless you, really. Because honestly, I don't know if anybody does. So thank you very much. I'll see you tomorrow morning. Please hit the like button. It helps me a lot. All right. Bye.